Hey everybody, hey traders, happy Wednesday. Welcome back to the final hour. This is Chris Pulver here. It's just set for 3 p.m. Eastern Time. 6 minutes for the close. It is December 4th. Let's get cracking. I was looking to see, we had Jerome Powell speaking at some type of New York Times summit, deal book summit. Audience questions expected. I was looking to see if there's any major headlines. Price-wise, not a lot happened. We did have some drifting higher yet again. I did see some record inflows coming into the ETFs, which just kind of spells out that money is flowing in. And, there's obviously some risk to the downside, but path of least resistance remains the same. The Fed watch tool is showing a higher probability of the Fed rate cut coming up December 18th. This went from 55% just over a week or so ago to in the 60s to yesterday was like 74%. Now it's up 79.2%. So the probabilities of a cut continue to happen, which means this is likely going to be the case. So I would imagine that markets are expecting a 25 basis points cut, and then we're looking for a pause through possibly May of next year. So if you have a look at the probabilities, this would be a 25 basis points cut confirmation if they proceed with this on December 18th. And then we're looking at a high probability pause for January, pause to potential cut. This is a pause at 32% probability and another 25 basis points cut at 50.5%. And then May, another pause. So potentially a cut in March or a cut in May. And then the other one would be by the end of the year. The market's only anticipating being as low as 3.75%, which is only going to be another 50 basis points lower than if they cut in December. So could shape up for an interesting 2025, but right now I think the markets are well on their way to finish somewhat strong for the year, and we're going to see if that pathway continues to be bullish. So that is where I'm at. Markets this week, we just had basically it was a gap higher today. I mean, Monday, Tuesday was very quiet. You can see that the intraday highs and lows for Monday, Tuesday were the exact same. We had a gap higher today, had some indecision, some nice choppy price action, and then some late flows later on as we're pushing to this final hour, getting up a little bit higher on the day. For the gain itself, I mean, it's a pretty decent rip from the close yesterday. Let me find that exact close right here. So the close on Tuesday to current price right now, the S&P is up about 0.55%. If we go to equal weight is actually underperforming on the day. Futures had a pretty good rip throughout the evening and ended up opening and pushing higher as well. Let me do a quick update on my 9:30 candle this morning. So it should be right in here. 9:45, 9:30. That little choppy candle right there. There's my 9:30 candle from this morning. And then the NASDAQ futures. What a nice little bottom candle for the day. Right in there, breakout around 10:15. Pretty nice little run. So 10:15 breakout, retest, retest, breakout, retest. And all in all, pushing bullish. So pretty straightforward. All right, what else we have? Q's up over 1% today, another pretty big gap higher. Closed yesterday to open today, opened up 0.67% higher. Probabilities I discussed this morning during my live session, there was only about a 40% chance that the market was going to close the gap on the Qs today. You can see that clearly wasn't the case. So probability is you got a slight, a slight edge probability that we would stay and keep this gap open on the day. And it did exactly that. So little drift to the upside. The Dow carved out some gains today as well. We had a gap up, some choppy price action, but carving out actually overdoing the S&P today. So we're at 0.66% on the Dow, 0.55 on the S&P. The Russell pretty much flat on the day. So we gap slightly up. We're actually clinging. I don't know how we're clinging to this. We're barely positive from yesterday's close to today's price action. Pretty much even. IWX is your top 200 in the Russell. That's down in the day. Russell itself flat for all the other indexes and futures. Volatility index up about 1% on the day, which I think is interesting, considering stocks are drifting up a little bit higher, but the VIX is up. That's peculiar. So volatility index up around 1% on the day, which we all know that's a pretty small chunk, right? All right. Hey, William, how are you? Papa John, usual suspects. Come one, come all are welcome. Let's see here. Okay, what was this? Yeah, ETFs hit record inflows in November and are on pace to surpass 1 trillion by the end of 2024. That's big. So there's some money that's been sitting on the sidelines getting thrown into the markets. We'll see if this little Santa rally is happening. A lot of times this is the, kind of post Thanksgiving into December, or they technically, I guess, call the Santa rally like the last week in December and the first week of January. But I don't know. I've always called it kind of the holiday drift that starts after Thanksgiving. SVXY still holding long. Dollar index revisiting this, pretty choppy on the day. Indecision. Oil down on the day by about 1.6%. Still watching the floor, watching the highs, looking to see if oil is just going to squeeze into some type of decision. So we have lows here. We have lower highs. Eventually, oil is going to have to make a decision. Now, I'm looking for that potential squeeze to the upside just to see if my my crude light futures debit spread is going to be positive. But if it breaks to go lower, I'm either one looking for a potential fake out where there's a little liquidity grab here, bear trap, and then the market slings the other way. Or if we are going to keep inflation pressures tamed, then we want to see energy prices head lower. So that will be some data that we'll dissect next week. Does everybody know that we have a bunch of rate decisions coming up as well? I think we have RBA, we have BOC, we have ECB, we have SMB, then we have the Fed and the BOJ all over the next 2 weeks. So that's 1, 2, 3, 4, 5, 6 rate decisions. Plus, we have US CPI and PPI coming out next week. So, despite this seasonal stuff, I'm sure that the market's going to want to see good data to go with it. If the Fed watch tool doesn't change a whole lot, then, as we approach the Fed on the 18th, oh, did this just go down or up? I thought this was at 79%. Now it's at 75. That's weird. I could have swore this was at 79% earlier today. Doesn't matter. Let me see if there's any comments here. Rare earth prices surge. Myanmar mines fall under rebel control. Trump asked for Georgia criminal charges to be thrown out. I'm looking for anything with Jerome Powell. Beige Book says economy is stable. Firms more optimistic about 2025, but tariffs are a worry. Yes, we know that. These stocks aren't likely to beat the S&P next year. Bonds and stocks both stay bid after Powell. Let me see what Powell says. I'm just looking for any headline here. Powell's more hawkish today in his interview. That doesn't look like Jerome Powell. Just kidding. He touted the economy was stronger than thought in September and inflation a little higher than anticipated. The good news is we can afford to be a little bit more cautious as we try to find neutral. Points to the Fed moving slowly from current 4.5 to 4.75 range. The market had largely priced in. Doesn't see a shift yet this month. Fed pricing at 75% probability for a cut. That was unmoved through his talk. Okay, good. Notably, the Beige Book was released as he spoke, and it noted only slightly economic growth, though combined with better optimism. Treasury yields are at lows of the day, with the 10-year at 4.19 compared to 4.28 earlier. So take a look at the 10-year today and just overall price. So U.S. 10-year is down about 1.04%. That's a pretty good sign. It gets a lot more exciting as a consumer if the 10-year yield continues to go lower. It gets a little bit more discouraging if the 10-year continues to go higher. So if we can revisit this low, that is a good thing. If we break this high, that's a bad thing. I'm trying to keep most of my, what am I doing in my portfolio? What's the best thing to do to manage risk moving forward, or expect to see, big growth or tame growth or limited growth. Stagflation's a concern, right? All these things, are kind of in the background. Nobody seems to give a crap right now. But at some point, the market will care about a reality check. And if it's up here, market's likely going to have a reality check to the downside. If it's down here, we can party like it's 1999 and keep melting up through, Q1 or Q2 of 2025. Okay, let's get back to some other instruments here. So dollar index, sideways. I don't know, like I keep saying, be careful on the dollar. I am looking to get long Aussie dollar. I am currently long New Zealand dollar. I know that I'm probably early to these parties. Okay, I might be. I don't know. I mean, this Aussie dollar might be okay. I'm looking to level into this thing around 63 and 62 and 6,000. So part of me is hoping that we see a little bit more, pressure to the downside, flush into this level before we snap back, or flush even all the way down to this level, which was a late 2022 bottom, and see if we can snap back from there. So I'm looking to build in this little green box on my Aussie dollar. I am building already on New Zealand dollar. This one's already filled, and these are pending orders at the lower prices. This one needs to move down a little bit. Actually, I put that there because that'd be my break even if I got filled in all three levels. So I'm looking to average in trade one, pending on the New Zealand dollar. And euro dollar, I'm staying out of for right now. We're at 10500. We did have a pretty nice PMI flush all the way down to 103.30, but it came snapping back there towards 105. I mean, I said this earlier in a live session. I would love, and this might be wishful thinking, but I'd love to see the euro dollar come back and revisit parity and get down to this area. Now, this doesn't mean that I want to short it to that parity level. This means that I'll just wait and I'll see what price wants to do. If I can spot a more obvious price pattern to the upside, then we can possibly get back to 108, 109. But I'm not going to force that trade because that would be like calling the top on the DXY, which I'm not going to do. Okay. So right now, if this is just high, low, lower high, lower low, lower high, lower low, I'd like to see this thing move into parity or down into these 90s. And I'll be looking at dollar cost average into here and then look at a slingshot trade back towards 105. So this to me is a big opportunity to buy nice and low, and basically just trade over extended conditions. If we come back to parity, I'm looking for a bounce there. If we go below that, I'm looking at a 9,600 low, which we saw back in late 2022. So if I don't get the trade setup that I want, I'm probably not going to take the trade. If this goes back to 108, I'm probably not going to participate. If it comes down to parity, more interested in looking to scale in this area and looking to trade it back up towards 105. So hopefully we'll see something play out that gives me a tradable opportunity on the euro dollar. Pound dollar, I am currently long. Let me set a chart alarm here around this 2850 level. Let me go 1.28.40, and that would be a quick pocket fill. Okay, so if we fill that pocket, then I'll probably end up taking a small profit on the pound US dollar. New Zealand dollar, like I said, I'm already skilled into this one. If it comes any lower, I've got three levels I'm gonna buy into with really small trade sizes. So 58.55, 57.25, and 56.05. Looking to level in and see this thing. If I get filled in all three orders, by the way, trade one, trade two, trade three. If we come back to break even on trade one, I'll take my break even, take my win, and walk away. Obviously, I can hold out a little bit longer and see if there's a reversal pattern, then try to measure move back into, let's say 6,000 or 60.50. I can try to be very optimistic and hold this thing towards 6,400. Likely not going to be the case, though. I'll look to see if we just have a bottom. If we bottom in here, trade back into a range, one break even, and then two nice winners, I would take that as a pretty good net result. Dollar CAD, I'm holding on to longs. We're at 40.65. I'm going to stay long towards 45 and 4,600. I will continue to level into this one. Dollar Swiss, I'm still long. Any pullbacks, I will probably end up adding more to pullbacks on Dollar Swiss. My target is 92. Yen crosses. Be careful on the Japanese yen. I know I sound like a broken record, and I literally say that almost every day. But when we have the Fed on the 18th evening, going into the 19th morning, there's a BOJ rate decision and economic projection, and I just don't know if there's any funding business coming on with a lower volume, thin volume holiday trading, and if the BOJ does something silly and intervenes, or I don't know, there could be all sorts of weird stuff that happens when there's lower volume late in the year like this. And if that is the case, I don't know if we're gonna have a bigger move on the Japanese yen. So I would still be looking to trade mostly short term. Stick with your alignments and trade what you see. Don't be a hero. Don't try to call the tops and bottoms. But I'm not sure what the BOJ wants to do. Swap rates and trading Forex, yes, which is why I'm not trading the Japanese yen a lot at all. And that's why I'm still holding long on Swiss crosses, because I'm long Aussie Swiss, long CAD Swiss, long Euro Swiss, long Pound Swiss, long New Zealand Swiss. I mean, pretty much every trade I'm in right now is positive swap. I'm long Aussie CAD, that's positive swap. I'm long New Zealand CAD, positive swap. I'm long against the Swiss, positive swap. Long dollar CAD, positive swap. Yeah. So positive swap when I get it, I definitely factor it into how I'm trading. And these last like 2 years, especially 2023 start of the year to now, swap matters to me. And I mean, on the opposite side of that is reverse swap or negative swap. It's pretty expensive, and I if I'm not mistaken, brokers still charge. Depends on your broker, but a lot of times you have that like double and triple rollover from like Tuesday to Thursday. Just depends on when it happens. But there's a lot of that stuff that happens through the currency market. Sometimes there's just big orders that come in, like Tuesday night at rollover, Wednesday at rollover, and they try to take advantage of that very quick, double and triple rollover window. And some of it is like very short term, but it's enough to move the market. So I don't know, it's a thing. Like large, institutional flows playing the swap game. It is very much a thing. Okay, gold. Gold is still pretty inactive for the last. I think this is now 6 trading days. 1, 2, 3, 4, 5, 6, 7 trading days. Quite boring on gold, which is totally fine. I don't really have any plan outside of waiting for gold to fall lower. I'm not shorting it to that level. I'm just going to look and see if I can scoop it up at a bargain and then take it back up to highs. If I don't get this opportunity to get a better price and it just works its way up, that's fine. I'll look to see if it's still a range bound opportunity like this. Okay, but then longer term, I'm looking for higher highs in gold. So I still like gold. It'll be interesting to see how the dollar plays out in the correlations between dollar, gold, Bitcoin, dollar versus all commodities. Dollar index and U.S. markets versus emerging markets. I think I read this off earlier today. I've got a let's see here. We've got dollar swings ahead of non-farm payroll from Tasty FX. If I look at my Dr. Data cherry picks from Tasty Trade, they were talking about the underperformance of Brazil, Mexico, and South Korea, and the top performance non-US with China, Canada, Japan. I would think that India's got to be up there too. What is? I mean, it's not the Nifty 50 anymore, right? What is? We got the Nifty 50, which has made a pretty good run. There's got to be other indexes for India. That's the India VIX. What am I looking for here? India. Let's see. What's the India ETF? You've got the MCSI India, MSCI India, INDA. There we go. So we topped out in September. I mean, that was a pretty good run. Topped out in September, which is, I mean, we did get to all-time highs again. India's been hit pretty hard post-September. Okay. So I'm curious as much as anybody, like, is the U.S. going to continue to carry the torch for the global economy? It's been pretty much the powerhouse since 2022. China's right there with the potential animal spirits if they want to lift them back up and support the property market. Keep talking stimulus, keep adding stimulus. If they do, then we look at the HSI getting lifted higher. Right now, it's just kind of stuck after that September surge, and it's just right back at these equilibrium points. So it pulled back to the 50%, kind of responded to that level. It is there's nothing really exciting going on there. I would say if you're looking for a trend line break, I don't want to draw it too aggressively because we could just go sideways. And we go sideways, do we carve out a low, make our way back up? I'm just looking to see if we revisit highs. Maybe it's not end of the year. Maybe it's Q1 next year. I'm not really sure. But there is a fib from low to high. So we pulled back around 61%. All China stocks that I have exposure on is down. So Alibaba's down 1%, Baidu's down 1.66, FXI down almost, about 9.9%. JD getting absolutely destroyed today, a 4.08% to the downside. I did roll my my calls down to 38.50, so I'm doing my best to still kind of repair and play the income strategy, which is just taking a little bit more time than I wanted. But I have lowered my cost basis from 43.90 down to like $37. So I'm chipping away at it. I mean, that's a pretty good savings when it comes to my overall cost. But it is frustrating to not stay ahead of price. I did also roll. I rolled out and up on Amazon. So I got another $1.10 credit today. I rolled it out to March and I rolled it up to 220. We'll see if there's any type of protection needed. I might end up buying a put, maybe something somewhat inexpensive. If we have a bit of a sell-off, I mean, we could have some gaps to the downside on Amazon, but overall, not too bad. But this gives me another, $11.10 of upside with the current price that already is sitting in like the low 130s. So overall, pretty well positioned on that one, which I like. Okay. Let's see. INDA. Yep. Thank you for that. And FK, what's happening? Good. So what else? What other currencies you want to take a look at? What other stocks? Anything? We do have some earnings today. Let me have a look. Also, just a little celebratory mark. We have 31 for 31 winners on my waterfall income service. We're currently on a hot little streak on daily profit play, 47 for 51. Closed out a couple of winners this week on my new service, which is my double up alerts. Closed out a SPY trade for profit, closed out WMT for profits. That is currently trading around 94.28. Are we at fresh highs on the day? Son of a biscuit. Yep. So I think I could maybe grab a few more pennies out of this one. Let me check and see where I'm at. So Walmart is trading about 8 cents higher, and this one is trading about 14 cents higher. That's not bad. That adds up. That's 22 cents. This one is trading for about 12 cents higher. So we're looking at about 35 to 40 cents more in gains, which isn't bad. 40 cents more out of a 150 debit. I mean, that's another 26% return on capital, which puts me closer to like 80, 85% return on risk. Either way, like I've got, 3 trades, 3 winners on Walmart. I'm happy with that. I got a nice little credit spread going that if it's all working out, that'll be like 75 to 80% return on capital. So we will see. That one is out to tomorrow. I think I have the credit spread expiration. Yep. So the 93 by 92 is out for Friday, and so far looking pretty good. Nvidia has been up on the day, and this one I was trading this earlier, so it's at 145. This one might actually close out. Let me see if I can close this thing out for 97 cents. This is liquid enough. Let me see if I can get it. I'm only going to sacrifice 3 cents of profit. 97's not filling. Let me try 96. Let me try 95. All right, I just got filled for 95 cents. I'm going to close it out for my NVIDIA trade. That is on my double up alerts. So I'm closing it out for 95 cents credit. And that is, so 95 minus 46 divided by 46. Nice. That's 106% gain on that trade. Not too shabby. Let me actually issue an alert there to make sure everyone knows. Double up alert. Trade management. NVIDIA. Trade management update. The 12/6 expiration. Bull call spread. So that was the 139 by 140. Paid 46 cents debit. Closing now for 95 cents credit or higher. $1 is our max profit, and that would require us to wait for Friday. Not waiting. I'm closing for profit. 106.5% return on risk. There it is. So NVIDIA for a nice little winner. Yippee skippy. That brings the win percentage up to 81%. That brings the net profit total up a decent chunk. Yeah, we're off to a good start. Average winner. Let me see if that's right. 23. Let me go to H12. Average winner, 90+% return on risk. Nice. Okay, so taking that profit on NVIDIA. 46-cent debit turned in 95-cent credit. If I sat on it and do nothing for the rest of the week, it's clearly capable of coming back down to 140 or so, even though that's well out of the expected move at this point. But I don't want to risk it. So for me to sit here and wait for 5 cents more profit, I'm happy with the profit. So I'm just going to take the profit and move on and manage the trade. Happy with that. All right, so that's a nice little winner. What else we have? I've got the Qs running. I've got the credit spread on Walmart still running. SPY's a butterfly. AMD is in with a butterfly. I'll check on that one through the week. BAC, CLSK, Ford added some trades in today with that service. So keep an eye on those for some spreads and some open positions. So continue to monitor. Some of those are 12/6 expirations. Some of those are 12/13 expirations. But yeah, just going to stay active. All right, good stuff. Been long the DAX all week. Just got out. Tempted to buy puts if it pops a bit higher. Yeah, the DAX has been ripping to the upside. That's really good. That is really good. And Walmart hopefully hits my 95 strike, even though I just have a credit spread in. But I'm curious what those. I'm curious what the call options trade for. They should be close to like 100% gain if I were to let it run all the way to 95. So just watching, just monitoring. Inflows are good. Okay. Let's see here. I've heard you talk about during the season, often price drifts. This time, yeah, it's just a holiday drift. I mean, the easiest way to think about it is path of least resistance. What's in motion stays in motion. I mean, basically, the inertia, the momentum has been created post-election, right? This was your first, like the jet boosters got ripped right here, and then they found their footing, and then this is our momentum. So all I'm saying is, we're sitting here at these all-time highs, and unless there's something to disrupt this market is pretty darn bullish into the end of the year. I mean, what would be better than a celebration of like, oh my gosh, the S&P was up 30% this year, right? The Qs are up 30+% this year. I mean, the market could be all excited and celebrate this crazy milestone. I mean, it still doesn't mean that we can't have pullbacks, coming in 2025. But when we came into the election, I know that so many traders were talking about, bracing for the downside and be ready for the downside. Look, I took some hedges too. But when this thing ripped higher, I had, all-time highs in my portfolio going into this move here. I had all-time highs going in here. I had all-time highs going into the election. And when it came out, even on top of that, it was just like blast off. And what I think this started to activate in the market was just inflows. Like money came back into the market. Everyone's already excited about 2025. Think there's going to be, lower taxes or, continued tax breaks. There's going to be, pro capitalism, pro deregulation, pro growth, pro business. And I mean, for the stock market being as greedy as it is, that's a good thing, And if the Fed is also looking to cut rates at the same time and also do it without letting inflation rip too high, then it's kind of that perfect little, threading the needle of, hey man, the Fed is not breaking the market. They don't have to be reactionary to something silly in the market. But what could disrupt it? We've talked about this. We could see a big policy reform from the Republicans in 2025. The markets may be okay with it. They may not be. Tariffs will be a problem when it comes to medium to long term growth. It will create a lot of global friction or a lot of friction in the global economy. This isn't a good thing. But right now, the market doesn't seem to care. And so if the Fed comes in and doesn't really talk down the market and doesn't really, I mean, if they say like, look, we're pretty stable on employment, data's been supportive, we're seeing improvements, blah blah blah, whether that's true or not, what they say the market kind of takes as holy, And so I mean, I have some questions. If we look at truflation and look at the inflation index, I mean, I'm certainly not loving this. I mean, this is like a V bottom in inflation, and we're sitting here, 2+% off the lows. This low was 1.01. It's now 2.79. That is a 1.6, right? Almost 1.7 increase in inflation. That's insane, right? I mean, heck, it's almost 1.8 for crying out loud. So, is our CPI numbers next week, are they going to reflect that? Well, you can go to the readings and just see what the news has given us. And here's your inflation data for the year-over-year CPI. You know, I've had this same discussion. This is a lot of review, but man, this is important stuff. You know, right now, this is where inflation was like, okay, it's trending lower. And then the market got real excited once we hit 3%, thinking it's going to go down to 2%. Well, the Fed did all this talking and said, we've got it under control, right? And they operate in this window by saying, we're going to keep monitoring, it's data dependent. We're going to start pausing. And then they pushed back on cuts. They pushed back on cuts, and the market saw, 3%, a little bit over 3%, anywhere between like 3 to 3.6, 3 to 3.7. Okay, so what were our readings here? 3.6 and 3.7, 3.6 and 3.7, 3.4, 3.5, 3.4, 3.4, 3.3, 3.4. So we didn't really get sub 3% until we had a move in August of 2024. Okay, and this is right around that time where, the jobs became an issue, the SOM rule was activated. Are we going to go into recession? All these things became this immediate worry in the markets. And what ended up happening? Very aggressive V bottom August 5th. Coming into the election, we saw some decent trends to the downside. So having this high to lower 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 high, that was a good sign to show like, okay, we are making some additional progress on inflation. My concern is the reality that we are now bottoming out here and going the other way. Okay. So the inflation that comes in next week, whatever that is, year over year, month over month, core versus regular, my concern is that we are basically fudging the numbers and not showing that inflation is running higher. Okay. So, I mean, one data point is probably not enough to break the market. And if the Fed does cut in December, but decides to pause through Q1 of next year, inflation might be okay month to month because the Fed is initiating this pause for another like 2 to 3 months. But I just think that right now, the momentum is strong enough, or the lack of sellers is strong enough that we're just going to stay in motion to the upside. I mean, it's because we saw very little reaction at 600 outside of, yes, we had the election rip. We hit 600. We pulled back. We found some efficiency. We've been going higher ever since. All that was a little moving average pullback. So if we are staying in motion, there's room to get up into the 610s. There's room to get to 615 or 620. If we get, pretty far stretched away, I am watching this closely. From current price to the 200 moving average, we're about 10% stretched. Now, if we get into like 14, 15% overstretch from the 200 moving average, I'm going to start getting a little bit more bearish. So if I'm looking at any type of like option trades and calling some tops and putting in some additional hedges, it's probably if we get to like a 15% distance away from the 200 moving average. And right now, that 15% distance would be, let's say we have to get up to like 620. So if I go 620, here is right shy of 620. 620, I mean, that's only 12%. So, I mean, I don't know. We could get up to like 625 or 630. Let me see what 630 measures. 630. Okay, we hit 630 on the SPY. I'm turning a little bit more sideways to bearish, at least in the short term. But until then, I think this thing can stay in motion if there's no major disruptions. If price does not have a giant fall to take out this post-election retracement, I think we just stay bullish. We can absorb the healthcare system, solve our healthcare crisis. We're always going to have a healthcare crisis. We have a terrible healthcare system. I think the U.S. is better off calling it sick care because we like to keep people sick. We rely on drugs. We don't fix the root problem. We fix the symptoms. And we have terrible privatized health coverage where I don't know how any. Have you seen the government reports that say that healthcare costs have come down 30%? I don't know what data point they're pulling from, but that is impossible. I've seen everybody's healthcare go up and everyone's premiums go up and everyone's deductibles go up and everyone's policies are changing. I mean, healthcare is, I don't know, man. It seems like that and like car insurance and homeowners insurance and everything that's getting more expensive is just a freaking racket. So I don't know how we do it. I don't know how we absorb those costs. Um, but we're not. We're going to have to, people are going to pay for it. It's as simple as that. So healthcare is going to go up, you know. Um, I don't know. I mean, look, don't expect life to get cheaper. If companies can pass on this, their cost to us as consumers, they will do it, and they will do it until we stop buying stuff. It's as simple as that. Like the consumer is really powerful. We just pretend like we're stupid. If we stop buying stuff, trends will change. If we keep buying stuff at higher prices, they're going to keep raising prices. It's that simple. Like supply and demand is real. If we don't buy stuff, we don't consume, things will change. But right now, it's like everyone's stretched. We're running, 4+% inflation for the last 4 years. We're adding $1 trillion of debt every, 45 to 60 days. It's reckless, but path of least resistance until there's a reality check, until price says otherwise. So just stay in the course, you know? All right. Yeah, we'll see. Okay, so is there room to continue to drift higher? Yes. Earnings season's pretty much winding down. We've got some major news coming up. We've got 6 central banks. We got some inflation data next week. We got the Fed on the 18th. But I look, for me to really get, I wouldn't even say bearish, but I would just say just to expect a downturn move. I mean, we still have lows from August, higher lows in September, higher lows in October, higher lows in November. I mean, we could have a pullback and have a higher low. But I think right now, with this time of year going into that first week of December, I mean, we have non-farm payroll on Friday, and then we have a bunch of news the next couple of weeks. But if this is nothing more than just a little hiccup and more upside and more upside and more upside and more upside, I could just see this market, getting stretched away enough that I'm going to turn a little bit more sideways to bearish on it going into maybe January, February. It doesn't have to be a big move, right? It doesn't have to be anything like, oh my gosh, we're crashing now. It's like, meh. I just think a minor, pause to me would make some sense. I mean, this seems like a lot of open space for those bulls that are just now getting pretty overextended. Now, to take this and drive this kind of 1 point further, let me take a look at the technicals here. I've had this workspace. I think it's called harmonics and pivots. Yep. So I just bring up this one. I have some subgraphs that I always like to consult. So let's go over here to the SPY. Now, this is a daily time frame. Okay. The daily time frame, this is my ATR, I believe. ATR, I can minimize that. Okay. All right. So I have a momentum oscillator and a relative strength index. So I'm looking to see if price and momentum disagrees. Now on the daily time frame, I don't see any major disagreement, right? I mean, are we overbought right now on the daily? No. Are we showing obvious disagreement on the daily? No. So there's still room for this daily to run into overbought conditions. Now, if I put this on a weekly chart, it looks a little bit different. Okay, my weekly chart, pull this down. And this isn't an immediate concern because obviously the markets can stay in motion this way and they can keep melting up higher as they've been doing. But as we go higher and higher and higher, we are seeing some disagreement along the way. But this is the more obvious one to me. The relative strength index is showing a lot more disagreement, and I see this as hidden bearish divergence. Doesn't mean I want to short the market, just means I want to be ready for some type of correction. I think is going to be just a quick reality check. So we are overstretched and showing some divergence on the weekly time frame, but we could still push a little bit higher on the daily. Okay, the QQQ, this one looks a little bit different. Okay, this one, go to my recent highs. Okay, recent highs have pushed higher. Same type of thing on the weekly chart. We have higher highs in the Qs, we have lower highs in momentum, and we have lower highs in relative strength. Again, could we push up and get overbought conditions once again? Sure. But I'm just going to be ready for a potential stretch away move and then a correction. So what is the timing of that? I don't know if it's going to be perfect timing, if it's going to be some type of news event that has to be a catalyst. Is the start of the new year? I have no idea. but I would just be ready for something like that. We go to the daily time frame. Let's see if this one looks a little bit different. Daily time frame, again, relative strength not overbought. Okay, momentum not necessarily in disagreement with current price, and therefore I can't really paint a picture and say like, this is going to be a bear move. It's not there yet. So I don't see all the alignments that are like we've got to go lower. We can still melt up. This time of year, we can melt up. We could have another 1, 2, 3, 4% of drift. See what the market wants to do. See how high it can go. Maybe we stretch up to 30+% year to date. That's a pretty impressive run, right? We take a look at sector performance. How's everything doing so far? Let's go year to date. Okay. I mean, the S&P is up almost 27%. We got communication services thanks to primarily the big market caps of these. We have Netflix that's still at all-time highs, Meta at all-time highs. I mean, right there alone on the weighting, that is 27% of this sector is Netflix and Meta performing extremely well, and they're crushing it this year. I mean, my gosh, Netflix is up 85% year to date, 73% on Meta with two of the largest weighted communication service holdings. It's crazy stuff, right? What else is performing well? Financials, really, I mean, ridiculously well for financials. What's your biggest one here? You've got Berkshire Hathaway. Somehow they're financials. All it really is an S&P proxy. JP Morgan Chase, killing it this year. Almost 44% for a bank. That's a lot of returns. Berkshire is only up 31.83%, but that's still outpacing the S&P. Visa, MasterCard, financial holdings. It's funny, like that's just people spending money. You've had a good year for consumers. So you've got, their transactions illustrated with Visa and MasterCard up 20 and 23% respectively. Bank of America, another bank, 39%. Wells Fargo, another bank, 50%. Goldman Sachs, are you freaking kidding me? 56%. American Express, showing that your wealthier demographic, especially 61% year to date. American Express, wow. Morgan Stanley up 40% year to date. That's a lot. That's crushing in the financials. Okay, healthcare sector lagging like crazy, right? After saving all, prices are down so much. Bullshit, I mean, healthcare sector is underperforming. Industrials doing pretty well. To me, the interesting performance this year has been industrials and utilities, which usually do not lead the charge, but we had a moment there where it was utilities as the top performing sector. Now, I still wonder moving forward with this, this AI arms race and adding infrastructure, if the best way to play it is through large cap tech, because they're going to be partnering with utility companies, adding, energy plans. I don't know what that looks like. Utility companies by nature have been high debt, high dividends, low beta. Their option chains are terrible. So, I mean, for a sector that's performed this well, it's like there's not a lot of them that I like to trade. But it's just something I've been watching. I mean, we just had good sector performance overall, and obviously the broader market's done the same. So it just keeps doing it, and it's just silly to fight it. So, I'm not calling a top here, but I would say if we get overstretched by, 13, 14, 15%, pretty interested in looking to see if the market's going to fall. Okay. Waterfall strategy. It's a service. It's in my Discord under what? Education updates. I've got my practical options in there. I have my waterfall income. Let me see. It's all under my education updates in my Discord. Got my daily profit play. Have my waterfall. Let me find out where that is. There's a webinar. Yeah, there it is. I've got weekly windfalls and waterfall income. There's a link to it. So everything I do for education, whether it's a options course, service on Mondays with daily profit play Monday through Friday, or waterfall Mondays at 11:30, or now my double up alerts or my Pulver alerts, like all that stuff is in my Discord under education updates. It's all right here. So if you come into my Discord channel, check out education updates. I've got my quick guide course for $27. I have my full upgrade course for it's $497, but it's 13 strategies versus 6. Anyway, just all my announcements are right here. Education updates, that's where I park everything. So you can, find what you want, ask me questions. And this is the conference that I just returned from. So TradeView, if you're a non-US trader, and you'd like to trade with some of my robots, I have some algos built with TradeView, and I'm able to bring in non-US traders. So that's a good thing. And their platform is fantastic. Their algo builder is one of the coolest things I've ever seen as far as building. Look, I'm not a coder, but I have I can at least review code, but their platform is like building a puzzle. So I just drag and drop the puzzle pieces, and it automatically codes it for me, which is pretty nice. But that's where I was. That's why I was in Melbourne last week, as I did a conference with them. I was on their panel for an algo conference, and it was a lot of fun. So anyway, but that's a nice way to get into some of my robots and some of the algos that I'm trading in the Forex market. Okay. But again, if you have any questions on that stuff, just jump into my Discord, throw me a message. You can ask the message anywhere in one of the public channels, or you can send me a private message too. As I say, I don't send friend requests. I don't send private messages as far as initiating them. But if you ask me first, then of course I'll reply. Okay. All right. Good stuff. All right. What else? It's 3:49. Got a few more minutes for the close. Qs. So S&P just melting up on the day. I think this is getting us up towards 0.6% on the day. Yep, we are just squeezing higher, up 4 points on the day, 0.66% to the upside. Qs are up 1.25%. Dow's actually up 0.8%. Russell's still flat, but carving out a nice little win late in the day. So up 0.4% now. And there you go. So we'll see what it is. But more melt up, path of least resistance. I mean, I guess the question that I'm asking, and what we should be asking here, is like, what is it that would turn this market? Because turning this market into a gap fill, or turning this market into an election high, this is not a bear move. That is a pullback. That is a pause. That is a buying opportunity. The only time that would make me second guess this trend in this direction would be if we take out a low. Because as we go back to September, and lows and lows and lows and lows, obviously those are all higher lows. So until price is going to do some structural damage or technical damage, this thing is buy the dip, sell the rip, buy the dip, sell the rip, until it proves otherwise. That is the easiest way to trade the market right now. Is don't be a hero. Yes, I have some hedges. Yes, they're outliers. Yes, they're going to cost me 0.25% or less. But if I lose on them, I lose on them, and the rest of the portfolio melts up, and I still get most of the lion's share of this gain is still being felt, which is good. Okay. I'm short on that one. Nikki, am I saying that right? So Swiss yen, I'm short. I'm short with like one swing position. It's a negative swap trade, which is annoying, but I'm not into a big trade size like I am in some of the other Swiss pairs that I'm generating positive swap on. So I'm currently short on the Swiss yen, and it's I basically just sold it around the 38250 zone. So if this one wants to hang out with this type of flush down, maybe it's going to be a channel, equal high, come back to the lows. If this is a double top, break the lows and go a lot lower, we'd have to have some type of big JPY event to see this sell off. Or if I'm right on the Swiss basket, the Swiss basket gets weaker and this drives lower. It doesn't have anything to do with the Japanese yen. I just want to see if the Swiss itself gets a little bit softer. So we'll see. I'd actually love for them to cut rates again. If they cut another 25 basis points, I think that would just help kind of cement that this positive swap trade and carry trade opportunity is still alive and well. Okay. Yeah, I'm short too. I'm short, just a small trade size. That's all. All righty, good stuff. Anybody else? Any questions? Couple of things. So active trading week. I mean, today was pretty busy. Another 42 trade opportunities today, or just some managed and some new trades. Closed out for a couple of winners. Had a winner on SPX today. Took a winner on NVIDIA this week. 3 trades for 3 wins on Walmart. That's good. And currencies, I'm just kind of leveling into some dollar crosses, holding some of my Swiss pairs. And I've got some more positions out for Friday and Friday next week. So just playing the income game, watching my levels. Pro tip: if riding to the expiration, take the stop loss off. Yeah, if you're trading daily profit play style, Papa John, for sure. Yeah, look, man, late in the day, that price sensitivity on those option trades, they can stop you out real quick. I had that lesson. What was that? Like a month ago. I got in at like literally 2 p.m. and like 2:05. I got stopped out, and the market barely moved. But like the sensitivity to those deltas, it'll stop you out quick. But if you're going late in the day, you really have to trade that thing to expiration. So you want to try to get a little bit wider. But again, that's a lot of risk for a little reward, and you just got to be careful on that. So, alrighty. If we don't have any further requests, then I will wrap it up here for the final hour. I appreciate everybody being with me today. Like I said, if you want to join my Discord, I'll post that link. So Discord and Telegram, just give me 1 second here. So Chris Pulver trading Discord, and I'll post a link for that. So invite people. There's the link in the chat. And then my Telegram, a lot of updates for a lot of updates. But that was a lot of trading today. And then here's my Chris Pulver Trading Telegram. And you can come in all for free. Chris Pulver Trading Telegram. There you go. And like I said, if you are in my Discord, in my Telegram is basically one to many. I mean, I'm posting a lot of alerts and overviews. I mean, today it was updates on my new service, and then updating. So we're 47 for 51. We got a nice little streak on daily profit play. We're 3 for 3 this week. Waterfall Income had 2 more winners today, which closed out with a gap higher. So we're 31 for 31. Good stuff. And then hopefully, I closed out WMT for a gain. I closed out Nvidia for a gain. All good stuff. But if you're interested in any of those services, any type of alerts, any type of programs, my practical options, my daily profit play, my waterfall, my double up alerts, my pulver alerts, if you want to trade robots with me with TradeView, that's whatever. It's all under my education updates in Discord, and you can just look through it. If any of this sounds interesting, you want to ask some questions, ask some questions. Free group chat, you'll see me here every single day. So if you click on my name, this is me. I don't hide in the shadows. I don't hide in direct messages. I'm just right out here in the public channel. So, send me a question. Okay. All right. And that is it, everybody. I'll let you go for today. We'll be back mañana. Okay. Thanks. Take care. Talk to you soon. Bye.